Okay, ladies and gentlemen, thank you for coming back to the 757 Renaissance Man podcast. I am your host, Sean Connors, and today my guest is Kristie Walker, and she is a financial literacy advocate. How are you doing this evening?
I'm blessed. How about yourself, Sean?
I am getting over being a father, but I'm fine.
Oh, you never get over that. You will never get over it. How about you grow into it? Here we grow again.
I'm working on it. I have a 10-year-old and a 14-year-old daughter.
Okay.
Yes, okay. And oh my goodness,
you got some little angels, some little queens. Okay.
Yes, that's a good way of saying it.
Yeah, that's right. They are.
So explain to me what a financial literacy advocate does.
Okay, so what a financial literacy advocate does is teach the importance of financial literacy. I would just say, let's start with insurance. Mm-hmm. Okay, so insurance is something that we will insure our cars, we will insure our phones, we will even insure our homes. We insure our property inside our homes, our appliances, or our material things, our possessions. But we won't insure our lives. We have to have insurance. You got to invest in you. Mm-hmm. Your life, you only have one life to live. So you got to invest in yourself, and insurance is a way of doing that. You even got to insure your kids, your family, whether it be your spouse, your children. You want to make sure that they are taken care of when you are gone. Say, for instance, you happen to leave. You want to leave them a financial legacy. And so you don't want to leave them dead, because like saying Papa was a Rolling Stone, and where he just left dead, so you don't want to be that guy. You don't want to be that guy to where you leave a burden on your family. When you're gone, it starts with your funeral, putting you to rest. So they got to be able to afford that, to be able to pay for your funeral and your arrangements and all of that. And so, and you could even take care of that now yourself, to make sure that stuff is in place. I know we don't want to talk about it, but you want to leave that legacy, for them. And so you want to make sure that they're taken care of when you're gone. And that's a part of even taking care of you, being able to take care of you when you go on. And so it's just so important. So, and that's one of the aspects of financial literacy. And so budgeting, that's another thing that we educate on. Budgeting, the importance of budgeting. Debt payoff, basically, how you pay off your debt. So it's just a full gamut of things. And so my real emphasis is on credit, the importance of credit. So many people do not even understand how much of a lifestyle credit is. It is a part of your vital part of your lifestyle. Let's face it, it controls where you live. It controls what we drive. It even controls where we work, our place of employment, because there are some employers that will pull your credit report, and they're going to pull that before you even get the interview. You can be an awesome worker. Your work ethic could be on point. But if your credit is not on point, you won't even get to prove that to them. You won't even get in the door, because let's face it, your credit speaks volumes of you. So does it speak well of you, or does it not? So you got to make sure you keep that in the forefront of your mind, that my credit needs to be in order. And so an employer could think that if you can't handle your personal finances, What makes them think that you can come in here and handle the responsibilities that they're going to entrust you with?
Mhm.
So you have to be able to handle your personal finances. I mean, even business. I mean, when it comes to a business, you got business credit.
Right.
And
Hmm.
so, how we say business before pleasure. Okay, so but let's think about this with credit. It's personal before business. You have to take care of your personal credit before you can establish business credit. Because most of when you go apply for these business loans and to get this business credit, most of them are gonna want to see how you handled your personal credit. And so if the way they're gonna look at it is if you're not handling your personal credit, I mean, why would they think you're gonna handle your business credit? They're thinking you're gonna handle your business credit just like you handle your personal. So if
Hmm.
your personal is good, then business is good. But if your personal is not good, it's a wrap. You're not gonna get that business credit. They're not gonna entrust you with it. So you just got to make sure that that is in check. Your credit, your personal credit, it is an investment that everyone should take. An investment in themselves. You got to do it. It's without an exception. Do you know that your kids, you can start, like I said about the financial legacy, you can leave with your kids, you can start establishing their credit, building their credit as early as 10. You can start a bank account. Obviously you're going to put it in their name,
Hmm.
when they get their allowance. That's what the way it started for me as a kid. I was doing my chores, so I got my allowance and my grades. My mom told me, she said, listen, I don't pay for B's and C's. And so, because she said that, that was incentive for me, motivation for me to make sure that I was on that A honor roll because I wanted to get the best value that I could
Right.
get. So she was like, "Oh, you don't get nothing for B's and C's." So I wanted to get something. So that was incentive for me. So I learned the value of money at an early age, just around the house. She's like, you want to get that doll, you want to get this little dress, you want to get this, you want to spend your money. So I learned how to save my own money to get the things that I wanted as even a kid. So of course it spilled over into my adulthood. Of course, she was like, I'll never have to worry about you financially because you're a little miser. you know you hold on to your money. I always had more money in my account than she did. So she taught me early. And that's where, serving in the military for 21 plus years, I learned, with me going all over the world and working in finance in the military, that there were so many people who were not educated on financial literacy. So when I retired from the military, that's one of the things I took on, that I wanted to educate. Credit is the big emphasis that I focus on. And so I'm helping people in that area of their lives. Is life changing. It's life changing when they see how, them credit utilization, how they manage credit cards, and your home loan, your personal loans, your car loans, all of that stuff. You got to know how to manage that, because let's face it, if you don't handle your business, it'll handle you.
Yes.
So that's that is what I want to be, that person to help you with that. So I'm the credit plug, basically.
I found out, and I found, like most people, I found it out the hard way
Mm-hmm.
when I was trying to buy a house.
Yeah.
The importance of, so I was at this point,
Mm-hmm.
all my bills are paid.
Mm-hmm.
I didn't owe anybody,
Mm-hmm.
but I didn't have a credit card because I was like,
Mm-hmm.
why would I have a credit card,
Mm-hmm.
when I could pay for everything? So when I went
Yeah.
to get my house, they were like, you don't have bad credit. You just
You don't have
have
no credit.
lack of credit history. Right.
Right.
So
Yeah.
I'm thinking I'm doing everything right because I don't owe
Mm-hmm.
anybody
Yeah, I don't
anything.
have no debt. I don't owe anybody
Yeah, my
nothing,
cars I had
so
paid for cash. I didn't have any car
mm-hmm.
loans or anything. So I'm like, at least they could see, I got X amount of money that I'm able
Right.
to pay. But it was the lack of credit.
Yes. And
It's
that's when you can't even get it. You can't even get credit when you don't have credit.
mhm.
That's a hard thing to do.
So what would
So,
be your advice for someone to in that situation that's trying to establish credit?
okay. So The first thing that I would recommend is, because you got to get some. Okay, let's look at it this way. Your credibility. That is your credibility. You
Mm-hmm.
know, they want to know. Lenders want to know: are you trustworthy? Are you creditable? And so, if you don't, meaning like lendable, do they want to lend anything to? Do they want to trust you with anything? And if they don't have anything to gauge on, then you know, then they probably won't give it to you. So you can't just go walk in the car dealership and just say, here, I got a suitcase full of money. Here, I want to buy a car. No, they're going to want to run your credit.
Mm-hmm.
Now, there are ways of you being able to go into a lender, but it's still going to be where you had to go to a bank or a credit union to pre-qualify and get that check, that cashier's check that you want to go in there with. So, but that still is a part of your credit worthiness.
Mm-hmm.
So what I would say is, someone that's trying to build their credit, you got to establish credit. You got to get some credit cards. I mean, whether you start with a secure one, meaning you put your own money on it. Say, for instance, you go to Wells Fargo and give them $5,000, and they put it on a credit card for you. It's your money, but it's a credit card, so it's secured. And so once you prove to them that you're doing well with the secured one, it can graduate into a unsecured one. And so if they see that you're trustworthy with your own money, so because that's what you want, OPM, other people's money. You want to spend other people's money, not your money. So you get the credit, establish the credit. And so you may have to start out with getting your secured one with your own money, and just spending your own money, swipe and pay, swipe and pay, swipe and pay, and establish and build it to where that bank will see that you are trustworthy with your own money. So then they're going to trust you with their money. So that's a good way. That's probably the best way that I would say to start with it. So like I said, what I was saying earlier about your kids, you can open up an account for them now, in their name. Obviously they can't manage it, but when they get to a point where they are old enough, and I think you should be teaching them, here's your debit card. You want to go buy this, you wanted these sneakers, you wanted these, you're going to spend your money, not daddy's money. Your money, your allowance, so you put it on a card for them. You could get a prepaid card or whatever and just put some money on there for them, and say, this is your money. Now, what you want to spend it on is up to you, but you have $100 on there, and start teaching them that way early. And you also can start establishing their credit by having them as an AU, an authorized user, on one of your cards. And so they can start as early as, I think, 13 or 14, being on the AU. And so by the time they get to college age and they're out there on their own and they're trying to go establish their own, you have already built their credit to where they go out there. I have some friends that their kids they had 750s when they went to college. They already had a 750. And so they established. So that's the kind of legacy you want to give to your kids. Good credit. And I find that a lot of parents don't have the good credit to pass along. So they got to have their finances in order to educate them and to teach them and to pass that on to them. So that's the biggest thing I would recommend. That's just starting out. I mean, being an AU, being an authorized user on somebody's account. And so that'll start establishing and building their credit to where when they do get older and they want to go get that first car loan, they have some credit already. Because that's basically, it's hard to get credit if you don't have credit.
Yes.
Yeah.
All right. So knowledge is power.
Yes.
What would be the best way to check your credit without negatively impacting your credit?
Okay. So that's a big myth. A lot of people think that your score gets lowered when you're checking it. It does that when it gets pulled, when you're going to apply for something. You get what they call hard inquiries. If you're going to purchase a car or even to get a home loan, they're going to pull your credit to see your credibility. And so that's when it hurts your score, when they do a hard pull on you to qualify you for, that home or for that car. But when it comes to you checking your own credit, it does not hurt it. You just have to, it's like, you can go to myficoscore.com, myfico.com. Some of them you have to pay for. But some there are some ones that are free, but it doesn't give you all three when it's free, and you need to be able to see all three, because all three of your scores are different for a reason, because it could be something on one of the reports that it's not on the other report. And so scores are like they're almost like the stock, they fluctuate, you'll see them go up and down, go up and down, but that's normal because it's based on how you are utilizing your credit, through the cycles, their pay cycles. A lot of people, one tip I can give you real quick is on your paying a credit card. You need to get familiar with what your billing cycle date is. And so your payment date is different than your billing cycle, because at billing cycle, you need to have made your payment before that, because that's when it reports to the bureaus. So you need to have paid it by that billing cycle date. Everybody focuses on the pay date, the due date. No, you need to know your billing cycle date if you're going to be building your credit. And so you have to make sure that your credit, those dates, and that's how you're building your credit, by knowing that's a part of you being a manager of your money, knowing when those dates are. If you got 5 credit cards, you need to know what those billing dates are. And some of them you can actually call in, and if you want them all on the first of the month, if you want them all at mid-month, whatever, you can call and arrange for it to be on a particular day. So it helps you, when you get paid, your pay cycles and things of that nature. So to where you can be on time, because you don't need any late pays or any derogatory marks on your credit reports, because a late payment can be anywhere from 90 to 100 points of your credit score.
Okay.
Yeah, it hurts. It hurts it real hard. It hits it real hard at a late payment. So inquiries do as well.
Is it better to, let's say I have a TJ Maxx card and I'm building up my credit. Is it better to carry a balance and pay a little bit at a time, or let's say buy $50 worth of stuff knowing that you're going to pay the $50 when you get paid?
It's always better to obviously pay it. You want to carry a balance, because your utilization needs to be 30% and low. I always try and tell my clients 25%. And sometimes, if you can keep it under that, that's even better. But you want to make sure that on your cards, and you want in department stores, cards are a killer. They're the APR, the annual percentage rate is too high on those. So you want quality cards. You want a Amex, Visa, MasterCard, those cards like that, like Capital One, Chase, you want cards like that. Those are good cards to where you get, if you're going to get rewards, get money back, for utilizing your cards. And so you want to leave at least paying it off. A lot of people think that, I got all my cards, my credit cards are paid off, they're on a zero balance. Did you know that a zero balance is just as bad as it being maxed out? Because it does not, it too much on it. If you put it at the max, that means you don't know how to manage it. And so you got to keep it under. You don't want to max them out. No lender wants to lend someone some money who always max their cards out, in the sense where they're exceeding it and they're not paying it. Now, when you pay it, utilize it to the maximum, and you pay it off before that cycle day, before it hits, then lenders love that, because you're actually utilizing the credit they're giving you. And when I say that, you have a $10,000 credit card, and you only put $100 or $200 on it, and you just pay that off. You're not utilizing that. They're like, you don't need this credit. So then you'll find that, I was at $10,000. Now I'm at $5,000. Okay. Now I'm at $2,500.
So they will take it from it. It will.
Yes, okay. And that will drop your score. When they decrease your limit, that hurts your score. It drops your score, because your trustworthiness is going down. They were like, okay, you can't be trusted with this amount of money. Why am I lending you this money that you're not utilizing? I'm going to decrease it from you, and I'm going to increase it for this other guy who is utilizing it. They use their credit. They need it. They want it, so I'm going to lend it to them. So you got to utilize it. If they award you a $10,000 credit card, you need to pay your bills using that card. You need to be shopping using card. And I'm going to tell you, your debit card, you should put that away. Don't use your money, you got a credit card, use your money, use your debit card to pay your bill, to pay them back. But if you go to the grocery store, if you go to the gas station, you swipe and pay, swipe and pay. Utilization. That is very key that you do that. And then your payment history, you making your payments on time. Pay often and early.
Okay.
Often and early.
Okay. So, besides the secure credit card, what are other good starter credit cards to get? Of course, the secure credit card would be ideal.
Yes, ideal. And then if you're with any kind of credit unions, those are they pride themselves on helping you in that arena. So just call your credit union and ask them what their products are. They'll tell you which ones are credit builders for you. They'll tell you which ones that they even have a pre-qualifier. You can go in there and they'll tell you, put your information in there, and they got 6 products, meaning they have a cash rewards, they have an Amex, they have a platinum, so all of those different cards, they'll let you know which ones benefit you, will be beneficial to you. And so just find out what products where you bank at, whether you're banking at a credit union or a bank, but credit unions are the best for that when it comes to that, building your credit. And so you go find out what products do they have that can assist you in that area. Like I know some of the credit unions even have a financial department where they aid and assist you in that and tell you, hey, for you this card will work best for you. This card will be a good card for you to build your credit, because they'll pull your score for you and all that kind of stuff. And they'll basically do like a little counseling for you, or financial counseling for you to assist you in that area.
All right. So on that, what's the best way to join a credit union? Because I know certain credit unions have criteria, like you have to work in a certain industry, you might have to live in a certain area. How do you find the best credit union for you?
Well, you can start with your area where you are, and you find out. You basically call them up and ask them what the qualifiers are for that bank. And some of your jobs, they'll tell you, hey, we have this credit union because you're an employee here. You can bank with this credit union because they have that relationship with them. Just like what CQ, it is state. I think state employers credit union. So you have certain ones. Like for me, I'm military, I'm retired military, so Navy Federal, Andrews Federal, Penn Fed. And I think like Penn Fed, all you have to be is like a federal worker, a government employee. You don't have to be military. A lot of people just think automatically you're Navy Fed, you got to be military. Not necessarily.
But it also works for dependents too, right?
Yes. That's what I was just ready to get to. Family members, obviously, family members can do it. And even if you might have a relative that, or a friend that, and they can just give their access number and say, hey, and it's not tied. It's not like you're being a co-signer or nothing like that. It's basically because you have that relationship with them and they have a relationship with the bank, that credit union. They can call in and say, hey, this is my access number. I have an account here and I want to get my brother, my cousin, or, my sister, brother, or friend, they can. So it won't be tied to you like, you think like a co-loan, like you've been co-signing or something like that. No, it's just that you have access. Even someone who lives in the household with someone who has an account at a credit union, you can prove that you are on that lease and you live with them. They have access, so same thing. So there's ways of doing it. There's definitely ways of doing it.
Okay, another good question. What is the main difference between a bank and a credit union?
Okay, so a bank, that's basically a bank it's more business. Banks, they're kind of like they deal more like with businesses, companies. But credit unions, they are, like I said, they are there for you to extend, like, home loans, refi and, car loans and things of that nature. That's what credit unions are there for, to do that kind of thing. But banks, they're just like strictly like professional altogether, where they don't really have those products and all of that stuff to help build your credit and all of that kind of stuff. So banks are they're separate in that entity because they're not really there to aid and assist you in things of that nature, building your credit and, giving you the best loan when it comes to a home loan or refi or a car loan. They're not the greatest. Not saying they can't do that, but credit unions are known for that. That is something that they provide. They pride themselves on providing that type of service to you.
Oh, this is some great information.
It is, man. I'm telling you, I get passionate about it. I love it. And so you gotta do your homework. Mm-hmm. You gotta know that stuff. And so those are the things that you can pass on to your kids, and you can educate them to where they don't have to figure it out on their own once they get grown and on their own. They already know this stuff. So
yeah, and it's funny, at the beginning of the conversation, my mother has been very forceful about me getting my kids life insurance.
There you go. You go. You got to do that. And I'm going to tell you, with this pandemic, a lot of people, they left out of here without, unexpected.
And GoFundMe is not life insurance.
Thank you. Thank you. You took the words right out of my mouth, because that's not, you relying on someone else. Well, you want your family to go beg in the church to bury, you don't want that to happen. You don't want that. You want them to be taken care of, so, and the same thing for yourself. You want them to be taken care of, and you want to be taken care of as well. You want to have that in place.
All right. So it's getting late and I'm going to let you go, but I have one final great question.
Okay.
Someone comes to you and says, Miss Kristie, I just got my stimulus. What's the best way to spend this money?
Invest it. Mm-hmm. I'm going to tell you to invest it, whether you invested in some sort of IRA or you invested in some sort of CD or, stocks, if you want to, if you're well enough, you're savvy enough in that, but you want it to be something to where you have something to show for it. You're investing something, you put it in the savings account or whatever. Do something to where it is going to, you get a return on your investment. Basically, don't throw it away to where you don't even know where it went. You don't even know what you did with it. If you need to pay some bills with it, you know what I'm saying? Then utilize it, make it count. Do something where it's beneficial to you.
All right, same question, but I'm gonna flip it a little bit.
Okay.
How do I take this $1,400 and build my credit?
Okay, build your credit. Okay, so you could do like I said, go get yourself, go put it on a secure card. Go and invest it in your bank, or put it in the savings account or some sort of pledge loan or whatever in your bank. So again, look into those products that your bank offers so you can invest in yourself and to where they can make that money grow for you.
Mm-hmm. Awesome. Yeah. Well, I want you to tell everybody how they can get in touch with you, all your social medias, websites, emails. I know you have a plethora. I've been waiting to say that word.
Okay. You can find me. My business pages are for Facebook. It's KN Walker Financial. That's my business Facebook page. Mm-hmm. And then you have my Instagram. It is the same, KN Walker Financial. And I have a few links on my if you go to my actual Instagram, in my profile, I have a digital business card in there. And so that's where you can really find all of my information there. Just go there and my emails there, my contact number, all of that's there. And even for my services, you can set up an appointment with me that way. You can see my links to get assistance with me with repairing your credit. So that's basically it. You can reach me on those. Same thing with now Twitter. It is KN Walker Finance, because financial was too long. So it's KN Walker Finance on Twitter.
Well, I got a sound effect for you.
I love it. Ching ching. I love it.
So I would like for this to be an ongoing series. Okay. And maybe we could take questions next time and answer some questions for some listeners so we can help them with Miss
All
Kristie
right,
Walker.
get that bag. Okay.
Yes,
I
ma'am.
love it. I
I
would love to do that. I would love to do that.
Awesome. I appreciate your time. Yeah, normally we don't record this late, but
I know. I know.
I appreciate your time. I appreciate your
My
knowledge.
pleasure.
Thank you for coming through. And ladies and gentlemen, this has been Miss Kristie Walker.
All right. My pleasure. Thank you for having me, Sean.
Anytime.
All right.